As we do go into the Memorial Day weekend, AAA says the average price of gasoline about $4.55 a gallon. That's around a 4-year high. Our Pippa Stevens is at HQ with a closer look at inflation at the pump, Pippa, and maybe what wholesale prices are telling us about the coming weeks.
Well, Carl, prices at the pump are up more than 50% since the beginning of the year. And with the unofficial start to the summer travel season kicking off this weekend, an increase in demand could pressure prices even more. Americans have already spent an additional $40 billion on fuel since the war began, or $300 per household. That's according to Brown University. Diesel prices are rising even more, up nearly 60% year to date. It's often called a hidden tax on the consumer since the fuel powers delivery of all goods. In California, a gallon currently costs nearly $7.50. That's up more than $2 in a year. And that impacts all the containers that are unloaded at the Port of Los Angeles and the Port of Long Beach. But the impact stretches far beyond just pump prices, given oil and gas are building blocks for more than 6,000 consumer products. The two key inputs are propane and ethane, which are produced alongside oil and gas, and for the most part, they're priced globally. Prices for polyethylene, which is the most common plastic, have doubled since the start of the war, which feeds into end goods. Now, the rate at which producers pass along those higher prices to consumers does vary, but there is often a lag, meaning that we probably have not yet seen the full impact of higher energy costs. Guys?
Yeah, I haven't even really gotten to food, and some warnings by various UN agencies, Pippa, about sort of a food price shock. I'm talking a global one, but still one that's going to impact potentially millions, billions of people.
Yeah, that's right. You look at all the kind of other products beyond just oil that are blocked behind the Strait of Hormuz, and that includes fertilizer, and then also just the disruption to global shipping, meaning that a lot of these goods are not getting where they need to be, when they need to be. And also something that to watch here is that El Nino is forecast to be potentially very disruptive this summer, and so that could be a double whammy of sorts for markets that are already grappling with this widespread disruption. But the main thing here is that there is a lag. And so while we focus so much on the front month contract, you see WTI here at 97.50 and Brent just above 104. That does not tell the whole story, because for a lot of these companies, there is, a much further out, a lag for when they do pass along those consumers. I was at a medical distribution facility, and they said they only renegotiate their contracts once a year. And so while they are locked in for this year, next year is going to be when they raise prices, because their container rates have more than doubled. So there are a lot of tentacles from the blockade of the Strait of Hormuz, and we have definitely not seen all of those price impacts filter through just yet.
Yeah, that's a great point. I've been trying to get us in the habit of at least watching December delivery for crude and using maybe that as a proxy of where we're headed. We'll talk in a bit. Pippa, thank you. Pippa Stevens.